TT, what's up? What's up? Scott's here. Good morning, Scott. Roberto, good morning, everybody. Good morning. So let's flip you over. Let's talk about walk you through my notes here. You can, of course, read my notes if you'd like as we're going. I also should show you the P&L right here. I actually wrote on the P&L this morning to just give you guys a little bit more just more clarity on how I manage the trade. So I actually split my risk between two entries this morning. So the first entry was here at 1.56535. My other entry that I'm still holding is here at 1.56555. So just about 2 pips apart. But once it started to move up on the 1 minute, I'm going to show you where I added to get to the full risk that I wanted to have on the position. So when this trade moved in my favor about 1.5R, that's when I closed about 50% of the position. Then as it started to move a little bit higher, you can see we go up to 75, then we move up to 79. I close a little bit more because now we're at 2R. And then as it pulled back down here and broke the 8 EMA about an hour ago, that's where I closed a little bit more here at 69. So yeah, Mike's here. Good morning, Mike. He said unemployment news shook anything up. So you're seeing a little volatility here on Euro AUD as this unemployment news does come in. I'm pretty sure it's coming in right now. Let's just double check. Yeah, the 8:30 news coming in here. Better than forecast, which is interesting. Core PPI is up as well. Producer price indexes, you can go here on Forex Factory and read that if you want. I'm not going to bother with that. But that's probably why you're seeing a little volatility here on Euro AUD. If we look at Euro USD, it's also experiencing a little volatility. Not too much, but a little volatility there. So it's kind of in line with what you'd expect because it's USD news, right? So with this Euro AUD idea, I showed you the P&L. You can see how it's moved from my entry. I was in here off the 21 EMA using the 1 minute to identify my risk point and my trigger signal. I'm going to go into that when we get to the 1 minute chart, but just notice the risk was about 13 pips. So once we were up about 1.5R in the next 30 minutes, that's when I took that first piece of profit. We went up 2R. I took a little bit more profit here, like I showed you. And then as you can see from my note, when it broke the 8 EMA for the first time right here, that's where I took a little bit more off. That's why you saw an exit at 69. If you look at the right side here, that's 69. You can see that price, right? So that's basically how I've managed this trade, because what I was looking for was it to hold the upshift that happened last night back here when the 8 crossed above the 21. I was looking for it to hold outside the 8 EMA, and especially in the next 30 minutes, I wanted it to continue to move higher, and that's what it did. So then normally when that happens, if it does play out this way, you're going to get that 1.52R pretty quickly, and you're going to be able to take some profit and lock the stop loss. And as you can see, my stop is locked, and it hasn't even come close to it yet. It might shoot down here on this news volatility, but it's still in an upshift. 8 is still above the 21. TDI is still long biased. So I'm going to keep the position on that I still have because I think this could go up to 157. 1.57 is the key price level that I'm looking at. So the first thing that we have to talk about now is the things that I didn't like about the trade, why I graded it a B setup, what could have been better, right? First, you see the TDI is in the buy zone all day. And this follows the AUD bias that we've seen on GBP AUD all week. I was watching GA for longs on Monday, on Tuesday, and on Wednesday. So yesterday, when we see Euro AUD move up, right, GBP AUD moved up, that sets the long bias. Look at the TDI yesterday. It's been in the buy zone since Asian session 2 days ago. So that TDI holding the long bias, pulling the EMAs up, makes me feel that we're in trend here and we can look to ride the long move. The thing that everybody's going to point out against this trade, and it's important that we discuss it, is the divergence. So if you draw it correctly from yesterday's RSI high to the price action high yesterday here, that next point, you can see the RSI is falling and price is rising. Now, why I still took the trade even with that divergence present is because if you were to read risk reward, let's just move this down here. If you were to read risk reward to this divergence line and I extended this all the way out, it would have to go through 80R to get to the divergence line. So it's great risk reward. It's over 4R. So that's perfect. I love that, right? If the divergence, we talked about it yesterday, if it had been like this, where let's just say it was like that, and I measured risk reward and it was, let's just say less than 2R, then I'm not taking the trade. But because the way you draw this divergence, you've got plenty of space to that line. Okay, so that kind of disqualified that divergence. I wasn't too concerned with that. I want to ride trend. I don't want to try to call tops. So L50 saying buy it, EMAs are saying buy it. It's in an upshift. I'm going to continue to look for longs. Then someone would probably say to me, well, Austin, what about the divergence today? Hold on, let me get my drawing tools over here. So then if you look at the divergence today, from today's RSI high, it's actually falling here. If you blow that up, you can see slightly, but it is falling. So with that moving lower, It's so slight. It's not very much of a concern. But then this moving higher, you could say, okay, what about that divergence, Austin? Well, if you measure risk reward to that divergence, it's still 3.2R. So it's still good. So if you look at the knocks, I wrote divergence is there on top, but we can still get good risk reward to the divergence line and to ADR. So that's the most important point, is that the divergence didn't scare me out of the trade because I can still get really good risk reward to it. Okay? I'm going to erase this line just because I think it's unnecessary. We're going to be buying this today. That's the idea, right? Now, we also should take into account any zones in the way. The high of day set here, this zone with that pin, that is definitely the area that we're struggling with. That's the horizontal level that was in our way to ADR. Even to that level, though, if you draw the risk reward to the bottom of the level, that's still 2R. And that's why I was willing to take the trade. Because as long as I can get 2R, my back testing tells me that my system's going to be profitable for me more times than not, as long as I'm getting 2R. So here you can see how the trade is kind of chopped sideways at that high. Now let's go to the 1 minute, and I want to show you how I took the entry, where I took the entry. So again, you see on the 15 minute, 8 is above the 21, and we're pulling back to the Asia high, which was our previous horizontal level. Let me just show you that first. Previous horizontal level, that was then resistance, turned into support. See it as resistance last night, broken, tested here, used as support. Tested here, we're going to think it's going to bounce, right? Because we have a bias. We know this is a support zone from yesterday's high, from the Asia high. We then are above it, so we can trade off of it. That's the kind of trading I like to do. Above horizontal levels when we're buying it, and below horizontal levels when we're selling it, with risk reward to the next level, which again, you get 2R here at least to the next level, which is high of day. So that's where the idea comes from. It's off the significant level of the 50 EMA, the Asia high, the support zone from yesterday's high. There's clearly something going on here at 156.40. That's the price zone here on the 15 minute, right? Now on the 1 minute, here you can see where I took the position. So we see the divergence on the bottom. This was another knock that I gave it, but it's not a serious knock. With the D1, I normally like to see it touch the 1 minute 800 EMA. So that was something that I did take into account when thinking about the total risk I wanted to put on the position. So since it didn't reach the 1 minute 800, I wrote it could be better if the divergence comes off that 1 minute 800 EMA, because that's the 15 minute 50 EMA. It's a significant level. But again, it's always about price, not an EMA. And we just said that 156.40 is the key zone that we're looking to trade off of. So if I go back to the 15 minute and I sync up this blue box, which shows the zone, look at then on the 1 minute where we're trading off of, right off the zone. So it still made sense to me to look for buys here. Now, it forms the divergence. It breaks the 50 EMA for the first time right here. And you guys know from my other videos, from the courses, when we have divergence set in and then break the 50 EMA, that's the first sign that bias is changing. So when you look at this and you see that break of the 50, you now can think to yourself, well, I've got 15 minutes support here in this blue box. I've now got divergence here, bullish divergence telling me that we can have some support here as well. So that's double confirmation that this is the bottom. This is where you'd want the stop loss, somewhere down near this zone, not much lower, right? As the trade then breaks through the 50 again here on the second time at 545, I start to get interested in the trade because now we're looking to pull the liquid 50 and the TDI into the buy zone. And when it gets into the buy zone, that's when I know it's going to move in the direction I want because I'm long biased, right? So I take the position here as it's breaking through the 200 EMA. The 200 is this white line here. If you look on the 15 minute, that's the same thing as the red 21 EMA. So the 1 minute 200 is very close to the red 21 EMA on the 15 minute. So seeing that, knowing that I'm in an upshift on the 15 minute, meaning the 8's above the 21, I know that it could come off the 21 and just continue in trend, right? So that's why I'm willing on the 1 minute to jump in here, knowing my risk point, knowing I'm in an upshift, knowing I'm coming off a support zone because I have risk defined and I know what it should do if it's going to continue to move in my favor. It's that simple. When that 1 minute liquid 50 pulls into the buy zone, that's telling me to stay in the trade. If it was to pull back down into the buy zone or sell zone quickly, I'm out. I'm not in that trade anymore because then what it would be doing on the 15 minute is breaking down through the 8, through the 21 and moving against me. So I'd want to be out of the trade. But when you trade like this, your risk is defined, you know what should happen, and you can have a clear level of take profit. And that's why I'm only holding about 20% of the trade here as it's coming back towards my stop. Because that 2R level for B setups is a great area for take profit based on my back testing. And we have that zone here from the high of day. 2 reasons why you should be taking a lot of profit here. And then when it breaks the 8 EMA, like I got out some there at 69, that's the first sign that it's not working for you. So I did well to get out there, and now as it's coming down towards my stop, it just stopped me out in profit. So now I'm full out of the trade completely. Very small with that position that just got stopped in profit, but I think this is the way you should be managing all of your trades. Because Let's just say, for example, this wanted to hold the 8 EMA and continue up to that target of 157. How would I know when it's going to get there? It doesn't have to go in 30 minutes. It doesn't have to go in 45 minutes. It could take 2 hours. So by taking profit as it moves to R multiples, which you can figure out based on your backtesting which R multiples you should be taking profit at, moving your stop up, it allows you to potentially take advantage of that continuation of trend, of the continuation of the move. And it also mitigates the risk because you've locked the stop loss. So if it does do this, where it turns around against you, you're getting stopped in profit and you're not losing any money. Thanks, TJ.